Aloha and welcome back to the week to come. I'm your host, Colin Edsman, and today we're going to be talking about what to look out for coming this week. Obviously, we're one day late. Yesterday was Easter, so happy belated Easter to all of you. I'm just going to double check that the audio and visual is good. All right, we're good to go. This week is going to be a big week, not only because of we have a deadline on our overall war crisis going on in Iran, but also there are some major economic data releases coming out this week as well. I'll cover that in a little bit. The day was surprising. Today was the first day the market was open after the weekend. Today's Monday. And we got a bit of a green on the S&P 500. I'm going to bring that up here in a second. Let me just see. Double check we're up and running. So I hope you guys had a great Easter weekend. I know I did. I got to spend time with my family, with our neighbors, our extended family, and my son got a chance to do some Easter egg hunting. He was pretty good at it. He got about 10, maybe 12 eggs throughout. I mean, I think he came back with 10. Lost a couple on the way back to the house. If you guys had anything cool going on for Easter, please, drop it in the comments. I'd be delighted to hear about it. Everybody celebrates Easter Sunday differently, so I'm just stoked. I got to hang out with my family. That's why we trade, right? We trade to increase our odds of enjoying our days off, enjoying our lives, and I want that for you as much as I want that for me. So here, let's see how the S&P 500 closed the day today. We'll see how the futures are. Let me get this up and running for you guys. There we go. All right, here we go. So as you can see here, the S&P 500 didn't do too bad today. It's currently down from from where it was earlier when it closed. But it was an odd opening because here we were up and then we came down after the day closed. But I was really surprised that we're up because usually you would see a correlation between the S&P 500 and the crude oil prices, right? You'd see kind of a counteractive chart going on, right? One goes up, the other one comes down. They seem to balance each other out. But today, that's not what happened. The overall crude oil futures also stayed elevated today, above $110 per barrel, which is pretty high. We're seeing increased prices. Oh, yep, I was wrong, immediately wrong. We are here elevated at $115 a barrel on the crude oil futures, which is very high. Even though we're getting a little bit more traffic through the Strait of Hormuz, it doesn't seem like we're getting any major de-escalation on the war front, which is not doing well for the overall conflict, but it seems for the day that everything is up, which is odd. So I'm expecting tomorrow to kind of correct. Maybe there's a bit of a delay going on, and we're going to probably see a red Tuesday on the S&P 500. But here at the micro crude oil futures, it's still really high. Let's zoom out a bit here. Like we're still within our initial blowout range, right? Blew all the way up to 119, 120-ish, came back down, but now we're steadily grinding higher, which is not great for anybody, honestly, because that means the oil prices go up, the electricity prices go up, energy costs across the board go up. Locally, we're hearing a lot of people wanting to buy smaller cars to compensate for the overall oil price difference or the gas price difference. I know we're going to be seeing increased electrical costs here in Hawaii. 20, maybe 30% is what the local news is projecting. Shout out to the people who have solar and solar batteries. Congratulations. You guys will not see a single difference in your energy costs. There might be some consumer good difference, of course. There's nothing that's really immune to this amount of volatility in the oil market. Now, looking at our Fibonacci retracement bands here, we've hit almost halfway to the top. So I'd imagine from here, we're still going to get to our initial blowout, about 119, 120, and then we'll probably retrace back to either here or this pink line. But the overall trend is still up. Like this is where it tried to de-escalate, couldn't, and then we've been steadily grinding higher. So the Strait of Hormuz and Iran, they have some demands they put out, and those demands include charging boats and tankers to go through that area. Depending on what country is moving the boat and what goods are on the boat is what you're going to get. What are we looking at back here? Just double checking that TV was still going. Behind me, we got Bloomberg TV going on live. I like to have at least some international news going. I'm in Hawaii, so if my hours are way different than the rest of the country. So what I'm watching for is a lot of what happens overnight for you. It's not even the afternoon for me, right? So I like to keep international news on. Being in the middle of the Pacific, Asia, Korea, China, Philippines, Indonesia, those all affect how we function here in Hawaii. So it's important that I keep an eye on that as well, not just on our little island and our nation as our nation abroad. Now let's take a look at what some other things going on here. Let's take a look at the VIX. How did the VIX do today? Now the volatility is still pretty high, I imagine, but surprisingly low for how high the crude oil prices are. So we drew these trend lines in a few episodes back, and it's, as you can see, it's still following my overall base trend line for the VIX. Still moving higher, still staying higher. Now it obviously elevated out of the trend line that I drew as a breakout, but it retraced right back inside and is now steadily staying inside that overall trend. But you can see that the trying to draw it in the air for you. It's right here on the screen, huh? As you can see, it's kind of like a trumpet, right? It's going bigger and bigger and bigger, right? So we're seeing a bigger and bigger range difference, right? Tap, come down, right? It's going to touch this line, and tomorrow the VIX will most likely go up because as you can see, we haven't had too many days where it stayed down. Now the S&P 500 was green like 4 days in a row, which is a pretty good indicator that at least it's found a bottom. But as you know, and a lot of traders know, that the second we start preaching bottoms, we're probably going to go lower. I saw a random analyst saying that Bitcoin could hit 10,000. That's insane. And if it does, I'm happily going to buy more. But you got to check out what's going on as far as the overall market goes. And it seems that we're still within this trend line that I drew, this trend box. And we're going to stay in there probably. Like tomorrow's or the next day, we're supposed to get some big news and some de-escalatory news. And maybe we'll break down. Maybe this is the overall start of a relaxing of the VIX and then an upward swing back to new all-time highs for the S&P 500. But I want to be hopeful, but we want to still keep a clear mind that we're still there. There are still people on the ground there. We just got that second pilot out, which is great. We don't need any more missing people. The amount of effort and operating power that went through, that was the first time, or the first set of people that were even on the ground. And I'm grateful that it was to go and get somebody and not to attack somebody. Now we're seeing bridges being blown up and bombs and drones still being thrown at Iran, which is just unfortunate. I'm hoping this calms down and we can let everybody go back to their day-to-day lives. Personally, I don't know. I don't care. Like, it's not my place to understand it fully on both sides. What I'm trying to do is navigate it from what works for me, and that's the stock market, because I can watch the overall numbers come in. Now, speaking of numbers, let's go and take a look at the Fed data coming out this week and some other economic news that could be affecting the portfolio, as well as the overall macro that could be affecting it too, right? So we might have a bit of a double bad week, depending on what the outlook is, because this is a bit of a temporary situation, right? For war. War is not forever. So I'm not quite sure if the Fed is going to price in things that are outside the war, right, and continue to price in things like this isn't happening, because they're looking farther down the future, right, not just tomorrow. All right. Now, as I take a look, let's go and find the information here, and let's get that to you. All right, so some major economic data releases coming out this week. This week features several high-impact U.S. inflation and growth indicators that could influence Fed expectations, bond yields, and market volatility. This coming Wednesday, which is April 8th, the Fed is releasing the minutes from the prior meeting, right? So we can kind of see what they were talking about in there. Markets will scrutinize any hints on the interest rate, inflation concerns, or economic outlook, right? We're really kind of looking for some sort of indicator that we could be getting out of this soon. Like I've been covering the last few weeks, the rates on the mortgages could be just over 7% if we don't chill this out sometime soon. So I'm expecting that to come. The de-escalation is going to come down and come through a lot faster because of the inevitable unaffordability of the overall conflict. This coming Thursday, which is April 9th, core PCE price index coming in as well. That's the Fed's preferred inflation gauge, if that sort of makes sense. Also, final Q1 GDP, as well as GDP price index coming in that same day, as well as weekly unemployment claims. Now, that's really important lately since unemployment has been really high, and the average time that people are unemployed is getting higher. The last I remember, it was 25.5 weeks on average that people are unemployed, and that's not great because we want people to have jobs, right? Jobs are good. We want them to have an income so that they can move economies, right? People move economies. Money moves economies. I want you to have some so you can choose where to move the microeconomy that you're thinking of. For me, I like to buy archery stuff. As you can see, my channel is a competitive archery channel with some investment guidance. As we grow and we mature, I want to grow the content that I offer my people, and that's right now investments as well as archery, because archery is always important to me, but it's not something that can be important to everybody. But what's important to everybody is how to grow your wealth, and I have the time to sit here with you. I have the time that I spend researching. It's my mana'o to share it with you as viewers, because I want you guys to grow. I want you to have as much information as possible. I don't want you to fear any of the upcoming events or the new technology that comes out. I want you to try to seek as much understanding as you can. These are tools, right? It's like a screwdriver that's going to change the way you take out screws, right? It's a new hammer, right? Some things work for a long time. Hammers haven't really changed. But if there's something that innovates, something that could change that, people might consider it, right? So it's your responsibility to consume as much facts and truths as possible to create the best reality for yourself. Now let's see what else is coming up this week. We also have central bank and policy updates. The Federal Reserve is not holding any policy meeting this week, but the FOMC minutes and upcoming speeches will be closely watched for signals on the path for rates. Now, the rates right now could be priced in at a hike. I saw a couple of posts. Now, I haven't seen them recently, but that Fed is pricing in a hike, and the markets will hate that. And as you can see, the markets are already in a bit of a free fall, right? The overall trend line on the S&P 500 is just going to need major correction. I'm not a big fan of having to watch the news a whole lot, but lately, at least for the last couple of months, we've had to watch a lot of news to kind of see where our trading signals are coming from. Personally, I'm getting some fatigue on that. It's just not how I wanted to trade, right? But until this is over, this is what we're going to have to focus on. So I'm looking forward to a day where I don't have to bring up a war for you guys on any episode of my show. All right, we also have some corporate earnings coming out this week. Something more interesting, like Levi's coming out this week. Levi is a great company. Everybody has those jeans, and those jeans hold value. people will take these used jeans and sell them for a premium almost, right? So Levi's is a great, strong company. So look out for that. Broader focus remains on how firms are navigating tariff impacts. So I know we've been talking a lot about war, but tariffs are still kind of looming out there like a ghost. Because of the tariffs coming out, or potentially coming out, people are still kind of pricing that kind of stuff in. We got Costco and FedEx suing the administration because they prepaid for their tariff costs ahead of time. So we could see a bit of an unraveling from that as well, depending on how the tariffs function, how they go. There's still over 10% priced in on Kalshi that the tariff checks could be coming out to the American people by the end of the year. Now, on a fun thought experiment, I don't invest in that one. If you were to, let's say, buy the yes, if you were to buy the no, you would get the 14 or 15% on that investment. But let's say it's not a no, right? It actually comes out by the end of the year. You would get the check, but lose the investment, right? So there's kind of a fun game there where you win on the tariffs check situation. So as far as market context and sentiment drivers go, like I said, trade and tariff developments are still looming over the war. There's still a bit of an ongoing U.S.-China border global tariff negotiation conflict, right? They're going to have a meeting sometime within the next couple months as well, so we'll keep you updated on that. Oil and commodities are obviously a big part of the conversation right now, but outside of that, diversification is still very important, right? If you were to keep yourself diversified and just kind of look and try to hunt for new things for yourself that are catching your eye, we're still in a good stock pickers market. Now, I'm not going to say that the market's going to turn around this year for your picks. We're looking at an outlook of next year already. I'm calling this year a bit of a wash, right? I'm going to just try to conserve capital as much as I can, preserve as much cash, and then work my way into, after this conflict, into the next year. Crypto and Bitcoin, more specifically Bitcoin. We got a bit of a rally the last couple of days, and we've come down a bit. Let's see what the overall rally looked like. Let's bring up Bitcoin chart. Now, I use rally very loosely, because I wouldn't say it was like huge, but it was a noticeable amount. And with Robinhood's beta to Bitcoin, Robinhood caught a little bit of that pump as well. On that front, we finally got confirmation that Robinhood will be partnering with Trump accounts to offer the next generation of investors a leg up, right? So if you weren't covering or following Trump accounts, it's an investment account started by President Trump to start the investment future for younger children in places that parents don't have enough of that expendable income to start this kind of thing. We know as investors, and we know even as regular people, that wealth comes from compounding, and a lot of compounding happens on the stock market, right? It's a benchmark for economic growth, and our country tends to do pretty well. Now, keep an eye on India. India is also doing really well lately, so I think that's going to be an up-and-coming part of the conversation as far as strong economies go. But we're going to keep an eye on the U.S. for the moment, and with Trump accounts, our young ones will be exposed to that. Here in Hawaii, it's going to be probably 95% of the children who are residents here will have availability to I think it's the young, maybe under 10, but if you were to make less than 100,000 a year, 150,000 a year, your children would qualify, and a lot of the people here in Hawaii don't make that much. So it's really going to help my local kids, our local children and their families not only grow your kid's future into something, but also it'll teach the parents to kind of watch how this functions. Like, they won't necessarily have a whole lot of control of it, but at least the parents will see, is like, oh wow, look at what happens if we do this. And maybe the parents will start to think, maybe I should do this. Maybe I should look into retirements. Robinhood offers great retirement plans and retirement vehicles for investors. So it's important for you to consider looking into retirement as soon as you possibly can, because a little bit now goes a long way later. When you have a lot later, it doesn't compound as much because you have a lot less time. So it's important you look into retirement as soon as you possibly can, and as soon as it's affordable for you. Even life insurance is important if you're a father or a mother with a family, right? But Trump accounts is going to be for your children, and those children will have access to them after 18. But with the amount of exposure and the amount of power that comes from being exposed to the stock market, I'm really excited for these kids. And the sheer fact that Robinhood strategies being headed by CIO Steph Guild, you're going to see the same kind of vehicles and the same kind of movement that you see out of the Robinhood Strategies portfolio. And if you as an adult aren't 100% knowledgeable, or even 40% knowledgeable, Robinhood Strategies is a great place to get stock market exposure that's managed by professionals, right? These are the people who manage all of the assets for Robinhood as a whole. So these assets are also being managed. Your assets are also being managed by these experts. All right, let's take a look at Bitcoin real fast. Here we go. All right, so this is a elongated Bitcoin chart, right? I sort of saw this coming, right? I had a box here, and if it fell out of that box, that's where I started to kind of look for buying. As you can tell, it's kind of hit a flat line over the last. This is from the beginning of February, right? So it almost took a dump out here. That was roughly around the time that February, yeah. So that was before the war started. But as you can see, as the war progressed, Bitcoin didn't fall more, right? Like it fell as much as it was going to, and an overall global conflict hasn't necessarily affected it all that much, which is actually quite surprising, because things like gold and silver have not been safe haven investments for a lot of people. They've been trading wildly, like a meme coin on Pump Fund or something. Like gold and silver are not notoriously known for that type of price action. That's what you would usually get out of Bitcoin. But Bitcoin here, as you can see, has just kind of found a flat area that it refused to go below, but it can't really break out of. And this is a good accumulation area if you don't have any. It's also a good time to buy the dip, because this seems like the area that it doesn't want to come through. Now, I'm not saying it's not going to go down some more. It still has that chance, but at the moment, it's definitely found its stability. And if we get more mass adoption, more institutions utilizing Bitcoin, maybe more conversations about it, maybe we can get back out of 70,000. But unless we can hold that 70,000 line, I don't see us getting out of it anytime soon. So this is a good just pick up a little bit. Once it hits 70,000, wait, see if it comes back down, maybe pick up a little bit more. Now, I'm not your investor. I'm not your investment advisor, so don't listen to me. I'm just some guy who looks at charts all day and would like you to also learn some of this information. But it's hard to be here all the time, so I'll keep it kind of small for you so you can kind of digest it, bring it into yourself, and then put it away if you don't want it. All right, what else we got going on? Oh, the Masters. I don't know if you guys are watching any golf, but this is coming up this weekend. Now, I've traded golf before, and I've had a moderate amount of success. The last few times have not been great, but I think if I'm going to pick up any of these this weekend, I'm not going to look for the yeses. As you can see, the yeses are all low percentages, right? which is a high payout if you're right, but these are hundreds of players. And over the last few tournaments, I've seen some major upsets where the predictions that I had, the people weren't even on there, weren't even top 10, right? So I think this tournament, I'm going to look into buying the nose, right? Because these are still high chance of profits, right? You're looking at, if I'm wrong here, it's 86% chance that I'm right that he won't make it, right? So these are hundreds of players, and over the weekend, these odds will change. But only one person can win, right? And Rory McIlroy took it last year. This year's not been super great for Rory. He hasn't won a whole lot of tournaments, but he's still here in the Masters, of course, right? Naturally invited back because he won last year. Scotty Scheffler is in the lead, but he's been in the lead a couple of other tournaments, and that hasn't necessarily turned out. So I'm excited to see how this change in strategy goes, because like I said in multiple episodes, and I will continue to say, look for high percentage of profit. We're looking for income, right? We're not looking for long shots. Now, if you have some love for a particular player, of course, buy the yes on them. But the chances aren't high for all of them yet, right? So you'd have a better chance of success with the nose. All right, let's see what's some other stuff going on this week. Actually, let's check on what's going on for the day. So I'm going to go and double check what's going on and see if there's anything happened in the interim here. Here we go. All right, so as of a half hour ago, the strategic advisor to Iran, Parliament Speaker, comments on President Trump's 48-hour ultimatum. Quote, "It is Trump who has about 20 hours to either surrender to Iran or his allies will return to the Stone Age. We will not back down." Close quote, he says. Okay, so obviously de-escalation is just not in the picture at the moment. I'm not quite sure what the overall goal is. The markets are getting obviously tired of it because we got a green day, even though we also have a really high crude oil price. $115 a barrel is over twice as much as it was a year ago, about $55 a barrel. So that's a little bit disconcerting, but I'm hoping that it's going to turn around, because this, like I said, this is just not affordable for the markets, right? All right, so as we close this episode, let's try to have a positive outlook on the week. We covered what the Fed will be doing this week. There's a couple of cool companies coming out with earnings this week. Honestly, the only one to look forward to is Levi, because I actually wear those jeans. Other than that, please keep your eyes open for any movement in your particular areas. And if you have anything interesting that you'd like to share, please throw them in the comments. I'd love to research it and check it out as well. Now, as always, farewell, ahui ho, be safe, and if there's a storm coming here to Hawaii again this week, stay dry.